Hello everyone. Today we will be revising all the formulas of marginal costing chapter. Let's begin. So the first formula is BP ratio plus MOS ratio is equals to 100%. MOS refers to margin of safety ratio. So if in the question it is given BP ratio is 50%, MOS ratio will be 50%. If BP ratio is 40%, MOS ratio will be 60% and vice versa. It is very much relevant in solving question when either of them is given. The other one is variable cost ratio plus PV ratio is equals to 100%. If one is given, we can find the other with the use of this formula. Now the next one is Y is equals to AB. Y is equals to AX plus B. So total cost is equals to variable cost per unit into number of units plus total fixed cost. Can use this formula. Next, what is contribution? Sales minus variable cost is equals to contribution. Now, contribution minus fixed cost is equals to profit or loss. So basically this is of cost sheet. Sales minus variable cost is equals to contribution. Then from contribution we deduct fixed cost, then profit or loss is arrived. Now, what is PV ratio? PV ratio is contribution divided by sales into 100. So, vice versa, we can transfer it to the other side. So, now sales, if PV ratio and contribution are given in the question, we can calculate sales. Sales is equals to contribution divided by PV ratio. So if sales and PV ratio are given, we can calculate contribution. Sales into PV ratio is equals to contribution. Now, in question, sometimes they ask calculate sale break-even point in sales value, break-even point in units, break-even point in percentage capacity. So I have never seen BEP in percentage capacity, but this formula is there. So BP in sales value is equals to total fixed cost into BP in sale value is equals to total fixed cost divided by PV ratio. BP in units, total fixed cost divided by contribution per unit, you will get BP in units. BP in percentage capacity, BP in percentage capacity is total fixed cost divided by contribution at 1% capacity. Okay, sometimes the question asks that if you have to earn 5 lakh profits, 3 lakh profit, 2 lakhs profit, any amount of profit is given and you have to calculate how much sales in value or in units is required to earn that desired profit. So what you have to do, you will have to divide desired total contribution by contribution per unit or PV ratio or contribution at 1% capacity. So volume of sales required to earn desired profit is equals to desired profit divided by, if it is asked in units, so you will divide by contribution per unit. If it is asked in volume, you will be divided by PV ratio, and if it is in capacity, you have to divide a contribution at 1% capacity. Now, what is profitability at desired level of output? Okay, total contribution minus total fixed cost, or number of units into contribution per unit minus total fixed cost, or sales into PV ratio minus fixed cost, or percentage capacity at 1% capacity minus fixed cost. Now, what is margin of safety? It is the sales in excess of BP sales. Margin of safety is equals to total sales minus BP sales. Margin of safety ratio is equals to जितना भी margin of safety sales होगा divided by total actual sales into 100. Total sales is the total of BP sales and MOS sales. From BP sales we get BP ratio, BP sales divided by sales into 100. This way we get BP ratio and we get MOS ratio by MOS divided by sales into 100. If we add both of these ratio, it is equal to 100. The concept behind that is this. Now, BP ratio and MOS ratio are complementary to each other. It means total of these two ratios is always 100%. Now, let's come to next concept. net profit is equals to MOS sales into PV ratio. So if in the question their profit is given and MOS sales or PV ratio is given, so we can calculate one of the missing figures through it. Now again, total sales into PV ratio. It is also divided into two sectors. So total sales into PV ratio, what we get contribution. BP sales into PV ratio is equals to contribution, which is equal to fixed cost, because at BP sales there is no profit or no loss. So if we multiply BP sales into PV ratio, we will get the fixed cost. It is very useful while solving question. Now the other formula is MOS sales into PV ratio is equals to contribution. Let's come to next concept. Sometimes in question there are 2 years figures given, suppose 1920, 2021, or means there are comparison figures given 2 years. So in those questions we get confused how to calculate things. So it is very easy. You have to remember only these formulas. So if total cost and output are given, you can calculate variable cost per unit. Variable cost per unit is equals to change in total cost divided by change in output, or change in total cost. So you will be calculating change by deducting, suppose here 1920 and 2021 are given, so you will be deducting 2021 minus 1920, like current year minus previous year, this way. And how will you will calculate contribution per unit? Instead of output, if profit would have been given, so you have to do, change in profit divided by change in output. Sometimes profit and sales is given. So PV ratio is equals to change in profit divided by change in sales into 100. Variable cost ratio is equals to change in cost divided by change in sales into 100. So for all of them were very important. If 2 years figures is given and you are totally confused what to do, let's revise again. Variable cost per unit is equals to change in total cost divided by change in output. So the little concept behind this is change in total cost. So if we will be taking the differential total cost, so fixed cost will be getting deducted, only variable cost will be left. So whatever the variable cost is, we will be dividing it by change in output. So we will be getting variable cost per unit. Now what is contribution per unit? Change in profit. We will be deducting change divided by change in output. PV ratio. How we will get PV ratio? Change in profit divided by change in sales into 100. Variable cost ratio is equals to change in cost divided by change in sales into 100. Now rate of net return of sales. I didn't found this formula in any of the questions, but if it is there, we should revise. Rate of net return on sales is equals to MOS ratio into PV ratio into 1 minus tax. Composite or overall BP. Usually we don't revise these formulas and forget in exams. Composite or overall BP is equals to total fixed cost divided by composite PV ratio, total contribution divided by total sales into 100. Shortcut for cost BP. How to calculate cost BP? Differential fixed cost divided by differential variable cost per unit. Shutdown point. How to calculate shutdown point? Differential fixed cost divided by contribution per unit, or avoidable. Please remember this word, avoidable. Sometimes we take unavoidable in hurry bari. You have to remember it is avoidable fixed cost divided by contribution per units. Thank you for watching. If any of the formula is missing out, please comment down there so that it doesn't get missed out. Thank you so much for watching.